Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Vick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Hope everyone had a good weekend. Welcome to this Monday morning edition of Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. On the show today, we're joined at 8:35 by Rachel Shasha. She is a trader, an options trader. She's going to talk us through what she's seeing in the market these days and what kind of trades she's been making. But before we get to Rachel, we've got to talk about Friday's trading action. We have some M&A news that's not happening, some M&A news that is happening. We're going to talk about some earnings that we're going to get later on this week, but a heavy news day that's, for once, not really all earnings. So M&A, some ratings, and some other news to discuss. Joel, how's it going in the markets, and how was your weekend?
Weekend was not too bad, Spencer. A little bit rainy, but here ready for another exciting week on Benzinga's Pre-Market Prep. Let's break down the S&Ps. Had a little sell-off, 75.5. We did that overnight, but we've rebounded. Big number on the upside. Wednesday is Friday's highs. Also your all-time high, 85.50. That's the big number on the upside. Crude over $56 here at 56.02. I don't think we've been over $56 in quite some time in the crude. Maybe we'll finally make it to 60. And gold and silver trading in the green. Gold up by 310 or 13.7230, and silver under $17 at 16.90, but in the green here. Dennis, good morning to you. I just wanted to ask you, do you guys have daylight savings in Canada?
No, we don't participate.
Okay, so it's only 7 o'clock for you.
Actually, we do participate.
Okay, all right.
I think it's Arizona. Is that the only area, I think, in all North America, at least between the U.S. and Canada, that doesn't participate, isn't it?
I think it's just Arizona.
I think it's just Arizona, too. So, no, yes, where clocks went back there in hours on the weekend here. And it's actually light. It's nice. 7 a.m., you wake up, and, well, it's a lot of times left before then. But if you are up at 7 a.m. before, it's pitch black. Now you wake up and, there's some light out there. So there is life here. So I actually do like the daylight.
And the kids are all adjusted already. It didn't mess them up at all, right?
You know what? It actually was a lot easier than the last time because my kids just don't sleep.
All right, check out Dennis's daughter on Facebook. A very cute picture. Looks a lot like Laura. Just absolutely adorable. That was a great picture to see over the weekend. But let's get to the markets and not really earnings news, but merger news. Merger.
Oh yeah,
Monday.
look at this. We haven't had a big merger Monday in a long time, and we do have a merger Monday. At least potential deals here. I don't know if there's any deals actually announced, but there's a lot of potential deals here on the table and off the table here this morning. Let's start with the rumor that broke on Friday, which is Broadcom was rumored to be going to make a bid for Qualcomm. Those rumors have come to reality here this morning because Qualcomm actually gets the $70 bid from AVGO, although it appears they're going to reject that bid.
Yeah, and this news actually broke late Friday morning. We got some more color Friday afternoon as we got closer to the bell. But like you said, the report was that Broadcom could make a bid as soon as this weekend, and then that's exactly what happened. Broadcom proposed $70 a share is what they're proposing to buy Qualcomm. We're in wait-and-see mode now, but Dennis, you're right. The tea leaves are indicating that Qualcomm will say thanks, but no thanks.
And that's why it's not trading up to the $70 price, obviously, because it looks like they are going to reject the deal. At least that's what I believe Financial Times was reporting. We're at 3.5% dividend on this thing, 64.35. Stock's up $2.59. It's been a hell of a run from 50. And I mean, obviously, if there wasn't deal news here, the stock would still be in the low 50s. But, it had a couple days run up ahead of the news. And then the news on Friday, which gave it the 6-point pop. Now the official news here today, which gives you another couple points here too. What do you do here now, Joel? If you're in Qualcomm, and it's been a dog forever. I mean, this stock, if you look at the charts, we've had a hell of a rally in all tech stocks. Qualcomm has not participated in that rally. It made its highs back in 2014 at $81. And it's really been in the doghouse since. Now all of a sudden it's out of the doghouse. Now all of a sudden they're rejecting bids at $70 here. What are your thoughts here if you're a Qualcomm shareholder? What do you do?
What do you do? I guess it's hard not to ring the register, right? Because
I think I would.
Yeah, you know what?
You think they're getting a better bid?
I mean, that's the other scenario.
I don't think so.
Maybe you take off half and then see what, let the other half ride, or maybe do
sometimes that's, the thing to do. If you're really unsure on your position, you're in it, and, all of a sudden you got the 14-point windfall. Do I take the gain? Do I not take the gain? Sometimes that is the best decision, is to take off half. So, I'm always a fan of locking in some profits, especially on, a deal that, may not eventually come to fruition here. And a stock that's really had trouble. I mean, they might lose the Apple contract here. Apparently they're going to. I mean, there's some, trouble here for Qualcomm as of 4 days ago. Stock was ready to breach 50. And then all of a sudden, it turned around a little bit on their earnings report, and then obviously blast off into orbit on the potential deal with Broadcom. But before 4 days ago, the stock was really in trouble.
Exactly. And you see it filled the gap from earlier in the year. Another Nick Shaheen strategy would be, maybe a stock replacement strategy. I mean, I don't know if you want to be out buying calls today, but ring the register, take some of that money. If you really think it's, I think Spinner, somebody said, I think it's worth more than 70. Stock Hunter sold his Friday at 62.50. Wish he would have had a little bit longer, but when they say there's not going to be a deal, there's always a possibility that there's going to be a deal at a higher price, or it's just going to be off the table. And boy, someone caught this a couple days ahead of time. A lot of meat on the bone. 65 was your pre-market high. So if you're just going based on price, we'll see if we can get back up to the 65. And I guess they like this for AVGO. No matter what, I guess it's because maybe they're aggressive, maybe looking for growth. I don't know.
Maybe.
Yeah, I don't know.
I don't know why Broadcom's trading up 2.3% on this. Maybe it's the fact that they might reject the deal. Everybody was scared they were going to buy. But I mean, on Friday it popped too. And a lot of times what you see, and the reason, why Joel's mentioning this, a lot of times what you see is the acquirer, especially in the last couple of years, actually get hit when they're doing the big acquiring, because they're paying a premium for stock. I mean, they'd be paying $70 for stock that was just trading at 50 4 days ago. So, is that really a good deal? Obviously there's gonna be a lot of synergies here though. So maybe they're saying the synergies are going to outweigh, the premium that it has to pay. But this is a big pop for Broadcom here too. Broadcom blasting off this all-time highs. Yeah, it is.
Oh yeah.
AVGO blasting off into orbit once again. 280. I mean, this is an incredible move for the stock.
Right. And all-time high, you can see maybe a seller out there at 280. So keep on that. Went off the board, 273.63, 278 high on Friday.
A lot of other merger here news too. I just want to talk about another chip deal, though. This is an actual stock deal, but it looks like Intel and AMD are talking about doing a chip deal together to combat NVIDIA. And if you look at these two stocks, AMD getting a big lift here this morning. Full disclosure, I do have AMD in my investment portfolio. $11.79 is where it's trading at this morning. And Intel's actually getting a lift on this as well. Remember, Intel is ex-dividend here today. So if you look at it and you think, oh, it's only up a dime. Well, it's actually up a little bit more because Intel paid a 27-cent dividend here and actually went ex-dividend this morning. So the adjusted close on Intel is 46.06. It's trading 46.44, so Intel getting a pop on this as well. Intel got hit a little bit on this Qualcomm news on Friday. And, maybe it's because it's competitive with Broadcom. But if you look at Intel, it had its first bad red candle in a while. Now you get a pop here, potential deal with, AMD cooking up to fight off NVIDIA. The market's applauding it to a certain extent, but they're giving AMD a lot more lift than Intel.
46.60 pre-market high. Big level in Intel. I also got some love and barons over the weekend. I think about them looking at going into AI and VR. You got a double top, 47.23, 47.30. All-time close, or not all-time, close high of the move, 47.10. So sellers may be congregating at the $47 area. Big level on the downside. You don't want to see this thing below 45.60. because that matched Wednesday's low, clear buck down to 44.65 after that. AMD, a little sleepy, ranges, similar ranges, congregated just under $11. What do you have? AMD likes to do this. You put 3 or 4 lows in the same area.
Blast off.
I didn't see. I wish I would have been looking at this thing. Lower.
It gives you 3-4 chances usually before it takes off, and that's what it did. We had multiple lows right in the mid 10s, 1062, 1070, 1073, 1082.
Yeah,
and now, we're gone here, 1112, 1180. So blasting off on the news here as well. We're going to see what goes up through an area quickly and go down through an area quickly. The one area I would say just technically, Joel, you may point this out to, is $12.
Yep.
I mean, that was support back in August and September. That's where it looks like it wants to get to here this morning. I haven't looked at the pre-market high. Joel will tell you about that, but I would say you're probably going to find some resistance at 12 and some overhead supply there.
11.99 is where it stopped this morning. I was between 6 and 6.15. But now sellers kind of stepping down. 11.85, your last print. Basis the daily to support that, 12.19. So 12 to 12.19 could give yourself some trouble. That 12.19 is your 6-day high.
Jumping over here to the other deal, and this is a deal that actually we're going to stick with the chips. There's another potential deal on the table as well. These chips are all so much news on these chips this morning. It's going to be hard to really figure out who's going which way and what direction, because there's all M&A news here, or potential M&A news. And I don't know if this deal is official yet, Spencer. This broke late Friday after the close. CAVM and Marvel are in talks here to merge up as well. So you got chip deals all over the place here this morning. CAVM trading up a cool $9 here this morning on this potential deal. It's actually up over 967. And Marvel here, MRVL, the bigger company here, not up nearly as much, but it is up 7% as well. Spencer, is this an official deal here yet, or still just rumors?
I have not seen any press release or anything indicating this deal is anything other than a rumor or a
okay report. But big pop here for CAVM, KVM, and Marvel getting some love here as well. Joel, what do you think here as you look at this CAVM trading up almost $10 on this rumor?
Wow, 80.18. I mean, it's just a rumor, so if it comes out quickly, it will keep on going. The thing with these kind of deals or rumors is you want to see something come out soon. That takes out the former, let's see if it's all-time high, 76.26. That was your high before. 77.42. That's your all-time high. So that's where you're trading right now with these things. 77.94, your last print. I mean, hey, if there's a deal, it's a deal. Let's hear it. If not, I expect that it will leak a little bit and come back in.
The other M&A news here is the non-deal, and this was announced on Saturday morning. Sprint T-Mobile deal looks off the table here now. I mean, this is on the table, off the table, on the table, off the table. Now it looks like it's dead. They were reporting, I believe it was Reuters reporting, looks like it's dead. Sprint is trading down significantly on this news. Obviously, this stock was going to get taken over $8 or $9. People have been speculating the deal has been dying for a while. That's why it kept getting hit. It got hit 5 days ago on potentially the deal, and then the deal was potentially back on the table. Well, it looks like it's off the table again. It's down 10% here in the pre-market. T-Mobile also getting hit on this, down 5.28%. And if you look at the telecoms, they're all down here. AT&T's trading down almost 1%. Verizon's down over 2% here this morning. So it's not a good day to be a telecom stock here. Let's go back to the Sprint chart, symbol S, because this stock is in a world of hurt here this morning as the deal potentially off the table.
586, your pre-market low. Buyers are stepping up a little bit. So I just call 586 to 6 even right now. Buy range, I mean, if you're shorting it there in the hole, I mean, you're looking for more bad news from to continue. 605, a former low of the move. So just got to keep an eye on the $6, the pre-market low. Probably better place to attempt a long or cover a short than try a true, I don't know, shortening the hole here, Dennis. I don't know about that.
Yeah. On news that we knew was already probably off the table. I mean, this deal on the table, off the table. There was a major risk this deal wasn't going to go through.
Why don't they like the deal? Well, what's wrong with the deal?
I can't tell you what's, they never actually had official terms, did they? Ever get we've had rumors of prices, but they've never actually made an official offer, did they?
No, I don't think we ever got that far.
We just knew they're talking, and is this going to get approved? I mean, it could be antitrust all over this as well. So, obviously the talks just broke down, it sounds like. So, there's no deal. Sprint wanted too much for their shares, maybe. Yeah, so maybe what they do is they let the stock tank, and then we come back at them. Let's talk it down to $405, and then make the deal at a lower price.
All right, let's look at TMUS. That it was having some problems ahead of this.
They wanted the deal for T-Mobile, and they're not getting it here either. So the stock's getting hit too.
And nice patterns here, kind of, a break and then a double top and come down another double top. Former low of the move was in the 58 handle. We are trading substantially below that right now, just on the lows of the session, 55.70 here. So street not liking this. Let's go to a longer term chart. I don't know. Easily see $55 today.
I think so.
Yeah, that was your low in January.
And then, but the only thing is, we are down significantly. This isn't like this is just out of the blue. I mean, so you got to consider that as well. It looks like it's official now that it's off the table, so they're hitting it. But I think you could find some buyers here. But, these things ball gets going one direction, this market. It's so tough to get that ball going the other direction. I mean, AT&T has been a world of hurt ever since the WinX dividend. And it's been meandering here in the 33 handle for about a week and a half. Well, it's trying to breach a 33 handle. It did on Friday. Put in a double bottom, actually, 32.95, 32.93 from the last couple of days. It's down here again today, and the steal not happening with T-Mobile and Sprint. Verizon's really getting hit here this morning. I don't know if there's ever extra news here on Verizon, but it was a stock that we had cited the last couple of days. It looked like it was hanging on a cliff, had not been participating, or actually had not fallen nearly as far as AT&T, and it's playing catch up here this morning, down over a buck, down $1.15 now here in the pre-market. If you're trading Verizon, you had some support there in the 46 area. Maybe you find it there again, but all these telecom stocks do not look great.
46.21, your pre-market low, not showing much of a bounce yet in shares of Verizon. And then you could see you did make that low under 46. This was back in September, 45.71. We'll keep an eye on that. The only thing scary about that is a gap. If you take out that 45.71, huge gap to fill to under $45. So, danger zone here for Verizon if it can't hold 46.
Moving away from Merger Monday here and moving to earnings, because we did have some earnings. We had Berkshire Hathaway report late Friday. It's trading down a bit. Their results never matter that much. Look, it's a big mutual fund, already trades with a big premium there, so it never moves a lot on earnings. So if you want me to cover the numbers, we can. But I want to move to Michael Kors. And Michael Kors actually is a stock, a retailer that has actually been holding on fairly well compared to the other retailers. It's actually up on its earnings report here. Spencer, details.
Michael Kors, Q2 adjusted EPS of $1.33 versus an 83-cent estimate. So nice beat there. Sales of $1.15 billion versus a $1.04 billion estimate. So nice beat there as well. Q2 comps were down about 1.8%. Their Q3 sales guidance coming in higher than the estimate. Their GAAP EPS for the quarter coming in at $1.22 to $1.27. Fiscal year sales coming in slightly higher than the estimate, and fiscal year EPS coming in higher as well. You see comps for the fiscal year down in the mid-single-digit range.
It's a nice quarter. The one problem is, and that's why, you've got to look at technicals as well, is this $50 area has been like the Rock of Gibraltar. And it's funny, that's where it's struggling here again this morning. That's what it's got to get over. It needs to get over 50. And if it does get over 50, it would be in breakout mode here. But so far in the pre-market, 50 is trying to hold this. So, looking at the stock at 49.50 here now, starting to leak a pretty good quarter. If this can't catapult it above 50, that's problems, though. So 50 is my bogey. Gets out and starts breaking out over 50, it becomes interesting. If the 50 holds and starts to sell off from there, this is one that could actually turn around and get back the gains.
And 50.15 is your pre-market high. Dennis, putting to you the highs over 50 here, and the high of the move was 50.17. So right there, 3-4 highs, potential breakout for Michael Kors, KORS.
It's such, and the way me and Joel have done technicals, and obviously technicals is only one tool in our toolbox. We talk about a lot on the show because, it's a lot of information in the chart. I think it's important that you look at the charts, but there's also a lot of other information you have to digest as well. Is the sector in favor? What's happening? Is there other news? I mean, when you have, M&A rumors and stuff, the chart's meaningless. So you have to always, you take the charts with a grain of salt. You use that information, and sometimes it's important, sometimes it's not. In this case here, I look at something and, here's a fundamental earnings report that is, driving the price of the stock. But, there's a huge level there as well. And as I'm speaking, it's trying to take out that level. So, if you have an earnings report that can drive it through a big technical resistance level, then that, is something, you have to note. So on stock chart like this, I think the technicals are a lot more important than a stock chart like, for instance, is looking back to the Qualcomm deal, because, it's kind of in the middle of nowhere and it's all on M&A rumors and stuff. So, you got to know when, you need your technicals and when you don't. There's times that technicals are useless. I will say that, and a lot of people are going to hate me for saying that. And those times are when you've got a Qualcomm M&A. Well, I don't care what, the chart looks like. If the stock's going to take it over for $70 and actually does get taken over, stock price is going higher no matter how bad the chart looks. So that's the consideration there. But there's a lot of information in the charts as well. $50, this looks big here, although it's trying to break out there right now, Joel.
All right, Michael Kors. We'll see what happens during the regular session. What
about this Macy's? We'll go away from earnings here. Macy's down
Macy's.
here again.
You love it.
This stock, I love Macy's. 8.27% dividend here. Now, this thing's going to yield 10% here eventually. But you know what? I still say, and I've been saying it for a while, I think, obviously, a lot of people have been saying this, but everybody's been talking about the GE dividend so much and not giving Macy's any love. I think they're going to cut it. I mean, the stock's in a world of hurt. I do believe, and I've said this since, a long time ago, up in the 30s, I believe I was starting to get on the Macy's short bandwagon. And I see the chart of JCPenney. It just goes lower every day. And I see, okay, yeah, Macy's is a better company. Yeah, Macy's has some real estate, but that real estate is worth a lot less than everybody is thinking. There's a big argument, being made that the Macy's real estate is worth $6 billion, but don't forget they got $7 billion in debt. So, really, when you start considering how much is in debt there, is that real estate really worth a lot? If they just spin off of the assets, maybe that could help. They're going to have to do something eventually here, though, because the stock price is just.
What happened here? Why did we tick 18 here this morning?
I don't know. I think somebody got overexcited here this morning. I was looking at it too. It wasn't a lot of stock though, so somebody's just like, puke out their Macy's. There, a couple thousand shares at 18. It's already back bid at 18 and a quarter. I know on fast money, and those fast money guys we've been saying have really been moving stocks. I know Friday they were giving Macy's some hate. But a lot of those calls are just chasing price as well. I mean, everybody does. We do it on this show as well too. But Macy's here, $18 level that it needs to hold here again. Friday's low is 18.33. It's taking that out, closed right near the lows. I mean, the stock continues to go lower until the company actually comes out and defends it, or the dividend, or says something, or does some financial engineering or something here, because this stock is just one of the most hated stocks in the retail sector.
Would it have anything to do with the fact that JCPenney announced on Friday that they're reorganizing their merchandising operation? And the one thing I know about retail is that the buyer and the merchandiser is the most powerful person in terms of inventory, and JCPenney, they're chief merchandising officer is retiring and they're not replacing, or he's stepping away and they're not replacing him. They're just reorganizing the entire business. So I'm wondering,
that's going to take a long time. Well,
they're just start letting people retire and not replacing them all, because the ratings on the wall here for JCPenney. Whatever expenses you can cut, you cut them.
Maybe
tumbleweed store. JCPenney's in trouble.
Interesting on the Macy's, Dennis. You had a low at 18.33, and then you had the close at 18.36. So right there on the low of the move and the close right there, not a good sign. So I know you said it's quarter bid here. I mean, wait to stay green if you really want to buy this thing. Let it get over the close, first bracket, Friday's high, right just above Thursday's close. So technically not looking good. Someone had a whoop trade there at 18, but really need to clear the close at 18.36 in Macy's.
You get a green candle, wait for some reason. I mean, and we've seen this before. You get a green candle, you get some follow through, but it always just seems like this overhead supply. The overhead supply in this Macy's is insane. Everybody, is, been, pounding the table. Oh, the real estate. Oh, this, oh, that. And, there's some value here. Well, this has been a value trap as well. And I'm always a victim of these value traps a lot of times, but I'm not going to be a victim on the Macy's, because I think there's not as much value as you think when you look at all the debt that they have. So I'm out. I'm not buying Macy's at any point in time, I don't think. I just think department stores are really in trouble. These are huge stores with huge expenses, and Amazon is eating their lunch. I mean, that's just what the way it's gone. Like I said, out of the big three, if you were looking at Macy's, Nordstrom, and Kohl's, I like Kohl's the best. I think KSS is the standalone stores. They're not really in the malls or in the strip malls, but they're not in the, the traditional malls. I think they're set up a little bit better, but in any regard, I don't own any of these things just because the rating's on the wall. I mean, you look at JCPenney, not that the JCPenney and Sears are maybe bad run operations, they're a little more older, but I just can't. I could see a scenario where Macy's goes the JCPenney route. I can just see that scenario, and maybe I'm wrong, But, I've been right for the last 6-7 points on this. I wish I would have been short the stock all the way here. But, a lot of times, it's just, I'm just glad I didn't caught the value trap.
No, not at all. And these retailers are in a world of hurt. But what's getting a little love here in the chat? And Dennis, you were talking about it too. GE showing some
life.
Yeah. What do you think here? $20? Are we all going to be, looking back in 2 years and say, we had a chance to buy GE very near the flash crash low. I was talking about that level, 1937. I thought it may get there a few days ago, but no, someone stepped up ahead of it at 1963, now up over $20. What do you think, Dennis? Time to add to that GE long-term position.
No, I won't be adding. I don't like adding my losers even in my investment portfolio there. I'm sticking with it, though. I do think from a trading perspective here, it's interesting. You had everybody wash out under 20, got down to 1963. I saw a Barron's article there that, it's down in the teens now. It's going to stay there for a long time. Well, it stayed there for less than a day. So we're back up over 20 here again. I think this is a stock, and here it is in the pre-market starting to show some life. And I think there's a potential for a trade. The one risk here is whenever you're holding this thing overnight, I'm almost scared if I'm holding it like overnight as a trade because the dividend is probably going to get cut here eventually. I mean, they've basically come out and said, that, it's their high priority, but they've never once said, oh yeah, we're keeping that dividend. So I think it's going to get cut here eventually. I think that stock could get slammed on that still. I don't know how much, some people are saying it's all priced in. I don't know if I believe that or not. So it looks interesting on the technicals right now, but if they come out tomorrow and cut that dividend, technicals aren't going to matter much. So it's interesting over 20 as a day trade. I like it here. I think I'm a buyer of pullbacks down to 20. I think it could have a good candle here today. It's already trading up in the pre-market. So I like GE on pullbacks here as a day trade. As long-term investment, which I have in my investment portfolio, I'm still not sure. So not adding to it, sticking with it because I've been in there 17 years. But, they got a lot of problems. I mean, they bought Baker Hughes at the highs. They sold off their financial business, Synchrony, or they spun it off there, which obviously I should have went with. And that was one of their better businesses here. They've just done a lot of things wrong. They're doing buybacks, too high. Done a lot of things wrong over the last few years. And obviously last 17 years, really, when you think about it, because the high on the stock was $60 back in the year 2000. Here we are 17 years later, and the stock's still 66% off the highs. That's been 2 decades of darkness. I guess when Jack Welch left back in the early 2000s, that was the time to get out of GE.
Yeah, that's 60-50, but we'll see. Buyers come back under 20. 1963, what a great year that was. That was the low of the move. 1996 and 1980.
Is that the year you were born?
Yeah. So that flanked by a 1996 low, a 1986 low, and even got a 2005 low in there. So let's see, long-term support. Maybe if you're risking, let's say you can get it at 20. You say, I'm not even going to worry about this 1936. I'm going to give myself an 18 stop and try and get out at 24, possible setup. But once again, as Dennis mentioned, they cut the dividend. That might be the flush and then be able to get back in. But I'm buying this stock when Deutsche Bank tells me to buy it. I'm all in.
You know what? That's a great call, actually. And props to the Deutsche Bank. We made fun of them for a couple of days there because they kept making the call. But, when they turn around and get bullish here, I think I might even buy more there, too. Speaking of, GE, 264,000 shares to buy. Look at this. GE surprising with the buy imbalance here. Table has turned. We just need to follow these imbalances, Joel. And, there's people that are saying, the pre-market imbalances aren't very meaningful anymore. But that, is obviously.
So let's start. Was there a buy imbalance on Friday, Spencer?
Let me look on GE. Yes. No.
No?
No, I don't think there was. No.
I think it was a small sell.
It was Thursday. Thursday, they did a small buy imbalance.
Yeah, and it had, sell imbalances forever. So, and, some people think the imbalances don't matter. I'll tell you right now, the ones that come out at 345, the closing ones don't. There's too much institutional action there. The pre-market ones, not a lot of institutional action there. They push stocks, man. Look at GE. That just came out, and it was 2029 offer, and boom, it's up to 2035. Well, 7 seconds later, that isn't any other information. That's the information, the imbalance breaking at 8:30. That's when that information becomes publicly released from the NYSE floor. So it's 264,000 shares to buy on the NYSE floor. That's marked for the open. So right now, that's looking like GE is going to open stronger. So it's, and the stock's obviously trading up here this morning. But, that's the consideration here is GE, 264,000 shares. It's had selling balances forever, and now you're starting to see buying balances coming here too. Tables have turned in the short term here for GE. In the long term, still, the jury is out.
And, the institutions, the way they'll do it is, let's buy a quarter of them, let's buy 1 million shares. Let's not worry about the VWAP or the close. Let's just buy 1 million shares. We'll buy, a 250,000 4 days in a row, and we'll build our position. And, they don't, maybe they want an average price under 22 or something like that. They're just given an order to get it done. So we'll see if it persists another couple days ago, because Friday it might have, you had options expiration, so that
throws things out.
That might have, that might have distorted things
a couple of weeks ago. Just wanted to say, and you're making a good point there with the institutions, is a lot of people think, these stocks go anywhere. High frequency traders driving price, retail drives price. What still moves price at the end of the day is institutional money. Big money moves price. And the way you can sometimes, get and figure out institutions is, looking at different things like pre-market imbalances allows me to see what, any big institution, if they're out there, they're going to show up like a sore thumb in the pre-market there. Or, that's why I use open book data as well to identify where the institutional money is, because institutions are the big fish. That is what moves price. And an institution, like you were saying, that might want to buy 5 million shares of G or 10 million shares or even more, are going to do it slowly. Maybe they use VWAP, maybe they use some different things, but sometimes they use the pre-market or sometimes they use the open as well. And it shows up in those pre-market imbalances I'm talking about coming from the NYSE floor. So all we're trying to do is identify the big fish and then trade around them. So, I'm not going to fight a big fish that's going, the tape straight up and, they've been buying like Square. We obviously know there's been a huge institutional buyer in Square for a long time. We don't know who it is, but every single morning, again this morning, 65,000 shares to buy. The only morning that didn't have a buy imbalance, like 3 days ago, when it got downgraded. So, and that was just because it probably still had the buy imbalance. There was probably just more sell orders that were offsetting that imbalance to make it actually go to the sell side. But the 65,000 shares to buy here in Square, again, Square's been straight up ever since those pre-market and buy imbalances have been showing up. It's not a coincidence. I mean, there's just buyers here pushing the price up every day. As the stock opens up 50 cents every day, even if it shows some weakness during the day, it's got a pretty good head start to maybe close green.
Wow, what a level, Dennis. 37.52. That's your all-time high in Square. That was flanked by a 37.44 high. And then in the pre-market, right, you are right here at 37.40. So you do have a buying balance. Let's see if it can absorb those sellers that were there 3 and 4 days ago, 37.54, 37.52.
And the other stock we always talk a lot about on the show is the BABA, and it's had buying balances here. It has it again today. It's pulled back the earnings report here. Does it get interesting to you at 180? I like the stock at 180. What do you think?
The Bobster.
We pulled back. Yeah, we had the breakout. We had the really good earnings report. They hit it. We know they've been hitting stocks on good earnings reports. They hit the Bobster when it's trading up 196. Now it's 183. It looks like it wants to come down like this 180 level. We got down to 182 on Friday. That's kind of the level where it was breaking out from, really. If you look at the old resistance back in September, I know you got through it a little bit in October, but I don't know. This is interesting at 180 on a pullback. No?
180,
that retracement of the recent move.
Well, let's see what happens, because you got a double bottom for me at 181 and 182.06. So that's your 2 and 4 day low. So if that doesn't hold, you might get a shot at 180. But right now, you got the support here at 182. And you know what? I got an interesting message from Lillian He, who's a senior manager at Alibaba, overseas market manager. And she said, hook me up on LinkedIn. So I'm bullish Alibaba now.
Well, let's not bullish Alibaba. Okay, right. MYL, Mylan Labs.
Wait, before we have a guest. We have a guest, yes. Rachel Shasha. She's a trader, and her site where she blogs at is called Sassy Options. And
should we bring her in on the hop, you think? Or
we can, sure. You want to? Okay.
All right, we'll get her.
We'll get Rachel on. I hope she answers her phone.
To be like, hello.
And then you're going to say, we're live, Rachel.
I got Rachel Shasha.
Hey, Rachel, how's it going? You are live on Benzinga's Pre-Market Prep.
Sounds good. What's up?
Not much. We just wanted to catch you live here, trader and bloggy at Sassy Options. We haven't talked to you in a while. We were talking a lot here about, GE. And I know that that's probably not it's a boring, low price stock for you, but I know you do look long term at things. Is there anything good you can say about General Electric?
Yeah, if you sell it now, you won't lose more money in the future.
There you go. That's an ugly looking chart. All right, so let's move to Q3 earnings season here, and we definitely have had a fair share of beats. The markets are near all-time highs here coming into the holiday season. I have enough juice in the tank here for a little bit of a Santa Claus rally.
Yeah, I definitely think so. I mean, strength begets strength. I don't see a current reason why it would just all of a sudden turn around. I mean, yeah, maybe we'll get some dips, but as of now, I don't see any reason why you wouldn't want to, or you wouldn't expect that the market's going to go higher into the end of the year.
And you're not new to the markets. You've been doing this for a while. I mean, have you ever seen such a prolonged, move north where these dips are just so quickly bought that just give us a little bit of your longer term perspective on the market?
I mean, no, it's wild. I mean, it's happened before, like, in like 95 and stuff, there were these just prolonged moves up. I mean, I know I read stats like it's like the longest we've ended up like the 3 or 5% correction. I mean, it's definitely interesting, and I even feel myself almost like complacent where I'm just like, well, like every dip, I'm like, well, it's not going to go down that far. But I mean, it is what it is right now. I mean, yeah, eventually it will, but I don't know when, and I don't want to, try to predict it and keep missing out. And to be honest, I feel like if you're a short-term trader, it's been pretty hard to trade the indexes because they don't move very much during the day. So if you're like a day trader or, hold it for 2 or 3 days, it's really hard to get those moves. But, stocks have been moving really on their own individually. They've been more separate, for this year than they have been since probably the financial crisis, where everything was basically trading, together.
Yeah, it's stock pickers market here. So is there anything that maybe, I know it's tough to buy stocks like all-time highs. Is there anything that's, maybe a little bit low, and which is probably not a good sign with the strength of this bull market, but is there anything that's maybe you felt maybe it sell off a little bit overdone? You maybe buy it on the cheap instead of just buying these breakouts. Anything on your radar along those lines?
And like for a long term or?
Yeah. Well, both. Let's go one long term, one short term.
I mean, I don't see anything. I don't really like the stocks that are dropping, like Starbucks and Domino's and stuff like that. To me, I think those are going to continue to be shorts for a little bit. But and maybe this hasn't sold off, but things like MZOR, it's like the robotics. I think it's not yet like super extended. I mean, yeah, it has gone up a lot this year, but I definitely think there's a lot of growth in there still. What else? Shack, I don't know. Like, I feel like I really like that one just because maybe I live in New York and see all the lines, and it is starting to come around. May still be in the penalty box for a while, but that's definitely on the cheap. And if you're looking for something long term, I think that might do okay. It needs to break over like 40 though, for real. But I'd say if it breaks over 40 and holds, that's a good one.
These restaurant stocks are just so tough. I think I saw something this morning.
Yeah, I know
that they're opening up these warehouses now, and they're cooking food. And
the apps. I read that. Yeah.
Yep. And then it's just delivered, and it's cutting down. The big part of restaurants is getting out of the first 3, 4, 5 years, right? With the overhead and the initial investment.
Yeah, exactly.
And these things are tough. So, all right, let's move on to some of the high flyers. I know you like to FANG, Facebook, Amazon. Start with Facebook.
I think one that seems to be good, like for short term. I mean, looking at it right now is OLED, OLED, which just reported good earnings. And they're also in Apple products. Yep. So I think that one is breaking out and it had a pretty decent consolidation from May to now. So I think this one still has higher, like in the very short term.
They like those suppliers. And what else?
Yeah, the suppliers. Yeah. I mean, like I'm looking at, like, last week I played a lot of AVGO, and it looks like it's hard to chase now because it's up even higher today. But now with all this going on with the Qualcomm and AVGO. It looks like right now nobody believes the Qualcomm thing will happen based on where Qualcomm is trading, since supposedly they're offering 70. But I would say watch, I think those are going to maybe be good trading vehicles. The Qualcomm, AVGO, and also NXPI, because Qualcomm has bought NXPI, I guess, but it hasn't necessarily gone fully through yet. So I think those are three to watch. Like NXPI just pulled back on Friday. That could be a good one, because if it doesn't go through, let's say, or if people think that AVGO is going to buy Qualcomm and it might not go through, then their investors in NXPI think that it's worth more than what Qualcomm is going to pay for it. So there could be like a bidding war, or I don't know.
So how do you approach something like the Qualcomm? I mean, it had the nice run up, then you get the news. They say, we're not going to do this. Is this something where, you don't necessarily hop in today? You let the action shake out a little bit. How do you, because obviously they'll be
If
juicing.
you're a short-term trader, I think you just you find the technicals. Like if it pulls back, enough, you just buy it again, and then it's probably going to race back to like the highs, or maybe even to 70, and then you sell it. And then, I think it could be a very good short-term vehicle if the premium's not too high in options. But yeah, I think it's going to start being a mover for the next, 2 weeks, month, whatever. When the news keeps coming out and the rumor comes out, or is someone going to put in another bid for them, or something like that.
Yeah, you got to keep an eye on the rumor mill. Okay, I want to ask you, and I always will, but I'm going to do a little earlier in the segment. This Goldman Sachs trading range here is really prolonged.
Dreadful.
The good report, and then they didn't like the trading revenues, and now it's just, boy, it's sure pesky over 246, 247. I mean, I'm thinking, should I buy 250 calls when it gets there? Then I'm like, no, should I buy the 240 puts? What's Goldman need to get over to the top?
If you think about it, if you watched it, all year from April basically to October, it stayed in the tightest range. I mean, not tight, but a range. It stayed from 215 to 230, basically. And every time it tried to hold over 230, it just went right back down. And I don't know necessarily if the range will last that long this time, but now if you look at it again, it's back in another range, a different one now. Now it's over 235, and 247 just keeps rejecting it. So I think once it finally gets over 270, holds. So, last week it got over it for maybe a minute, not even probably. And then just went right back down. So if you can see it's actually holding over 247, and I know it's hard because you want to jump in right away. You're like, oh, there it is. But I feel like if you can hold back a little bit and just see if it's really holding over it, which even I can't do all the time, but if you hold back and it's holding over 247, I think you can buy it, and I think it's probably going to end up going all-time high.
What do you like? I mean, I like to use a close, maybe not just one close, but 2 or 3 closes. Sometimes you really miss the boat on that because you get the one close.
That's the problem, because I feel like once it really closes, I feel like something like GS, once it really does close over 247, I think it's probably going to go. And you might miss the gap up then or whatever.
Yeah.
Because some of these, they've been consolidating for so long. I mean, look what happened when it finally did, get over that 35 area. It gapped over and then just kept going straight up for 5 days. So it's then you miss it, if it's been basing for that long, I think once it really breaks, you buy it.
And then
whatever, you set a stop,
And you get the 246.88 close on Thursday, and you're like,
I know.
Is that
I know.
Is that close enough? Yeah. And then boom, it sells off. But
you know what though? I know. So don't do it if it's close enough, 246, like you said. But if it gaps up that next morning, you just buy it right away.
Good. Right.
That's what I would say.
Okay.
But and also the other ones you asked me about. I have 2 more that maybe
sure. Go ahead.
Keep on the pullback. Sina, SINA, hasn't reported yet, but China stock. And then also Netties seems to be up this morning, which I'm not really sure why, but I think there was maybe some article about it that they're going to spend money on I don't know, something competing with Baba or something, or a commerce, something like that. But
what symbols?
I think that wherever it is now, Singles Day, that's coming for Baba, but
Baba.
Something with Netties, something's up with Netties, and I think if they can hold over 305, right now it's still under, but if they can hold over 305, I think it's going to be a good long trade. If it can't, then it's probably back to a short. But
could you give me the symbol on that one?
Hold over 305.
Can you give me the symbol?
Netties NTES.
Oh, okay. All right. All right. We could see. Oh, look at that bunching up. Look at that. Look at all
Yeah.
those highs in the same area. I like that. I mean, that's even a breakout I could get excited about, but it already broke
I mean, it's
out.
up a lot right now. Yeah, it's up a lot this morning. I know. But okay, so see what happens. See, let it base, let it do what it's going to do. See if it's going to sell off, and if it can get over 305, I think it has so much more to go. It's probably going to go straight to 330. So you'd still be able to get in and get a good profit, even if you miss this actual move.
You know what? I think that what you're doing here is something that we talk about a lot on the show, and it's a lot easier to talk about than execute. You're giving yourself two scenarios here, like you would like during the regular session. If you see this thing go through like 280, where were we at the other day in this thing? The high from Friday. You see it go over there. You're thinking, oh man, breakout over 285. Now the thing's over 300. So you're giving yourself a couple scenarios. Okay, maybe I missed that 20 points there, but that doesn't mean it can't just keep going. So you're giving yourself a
right, or take a break and then keep going. Just put it on your radar. Like you can't. I mean, it's so hard. I do it too, but you can't think like that. You can't think, oh, I missed it. Like, okay, you missed it. Big, like big effing deal. Like that's gonna happen. There's gonna be another one, and you just have to be like, okay, so it's now back in play. I'll watch it, see what happens, see the basis, see if it sells off. And then I'll catch the next one. But yeah, I mean, you're going to always miss something. Every day you're going to miss something.
All right. What about what's in your doghouse? One or two? I know you said GE, and the buying balance has grown in that one, almost 1 million shares. But what else? Like, you live in New York. Like, do you do a lot of shopping at Macy's? Is there any retailers that catch your eye on the short side, or what else is looking
on the short side?
Yeah.
Lately, I've been into like so I think, okay, so I've been wrong so far, but probably because it has so much short interest. But I think Children's Place, PLCE is going to be a short. I mean, they keep getting squeezed, but I just do not see how this is still so high. I really don't get it. And usually I'm just early. Like I'm telling you, I had the best short and I stopped myself out of it. It was horrible that I did this because Ulta, right before they had that like 100-point drop, I was so on top of them I was like, I'm sorry, it's not happening. Like people are not buying makeup right now at Ulta like they used to be. I know myself, I'm a girl. I know my friends. I know what they're doing. Like they're just doing it on Amazon. Do you know what you want already? And I don't think a lot of millennials are even wearing as much makeup anymore. But besides the point, I was just like, so about it being short. And then I just fudged it up because it went to all-time highs. I stopped myself out. And then literally like a week later, it just started dropping and then just went like 100 down.
I'll tell you right
but
now.
I'm convinced I'm convinced Place is going to be a short.
Well, someone is in agreement with you here over the 110 area here. You've had 4 or 5 highs between like 110.30 and 110.75. You're $2 away from that. So if you're looking, I mean, major resistance there. We'll have to take
or maybe that was Rachel.
Is that Rachel?
I don't know.
Yeah, maybe.
I don't know.
All right. We've been on the line with Rachel Shasha. She is a trader and blogger at Sassy Options. She's covering a lot of stocks, both long and short. It's great talking to you. I don't know if we're going to get you on before the end of the year, but good trading. And if we don't get you on again, we'll talk to you early in 2018.
Sounds good. You guys happy trading.
All right. Dennis, man, GE, is that all our pre-market traders in there? Is that
buy and balance that continues to grow here? So, we gave this to you back 2031, 884,000 shares now. It's growing. It's going to go over 1 million probably. There's buyers here this morning in GE.
Yeah. And boy, oh boy, buying it, the 2-pronged strategy, buying it in the pre-market, right? And then hoping to participate in that print. Or if you're, brave of heart, you don't say, all right, man, this is just getting overdone. This is a bearish stock, and you go in short in the open here. But
I think it's different. I think it's turned.
I know.
Did that. I think you could have did that the last few weeks and been good to go. But something turned here. And that's why it's all about identifying the turns. And Ace is trying to talk about the Macy's, identifying the turn there. I haven't seen a turn Macy's here yet, Ace, but if you get on Macy's as well, because it is oversold and stocks do bounce eventually. G has just been oversold. 24 down to 19 a week and a half. And now it's showing some life. Now you're squeezing a few people that maybe thought it was a short through 20. There's definitely people that said, look, I need to get out big psychological level. A lot of times what you do is you breach the big psychological level, you shake out the last weak hands, and then you have a little bit of a turn, a little bit of a relief rally. I think GE is not out of the woods by any means. But all I can say is right now, as a day trading perspective, I like the stock. I said it, 20 minutes ago on the show when the stock was trading 20 and a quarter. Now it's 20.42 here. As a day trade today, I like GE.
All right, and let's see here, 8:52. We did a little bit of ratings.
Well, we're talking a little bit about Twitter. Twitter in the chat, getting a hit this morning. Dennis, I don't know what you've seen this morning. I haven't seen anything. I
just dug everywhere. I asked other traders. I don't see anything.
The only thing I've seen.
So, and people are saying there's news over the weekend. So, okay, let's just give you a quick scenario. We had the Prince news over the weekend, big holder in Twitter. That was probably going to knock it down. Then you had the upgrade this morning. That was helping it. But it was trading the entire pre-market in the green. And then around 8:30, a sell imbalance did come out on Twitter. So that probably didn't help. But it really got slammed. It went all the way down 1945 here. And now it's starting to have a little pop. So maybe there's somebody that wanted out. I'm not sure exactly what just happened, if it was just one seller, but I don't see any headline on Twitter that just broke.
The only thing I saw that you didn't mention is that over the weekend there was this release, the Paradise Papers. There was another big release of documents related to offshore tax havens, and there was a connection between between specifically Facebook and Twitter. There was a connection between them and a billionaire who had invested in them through a bunch of shell accounts. So they traced investment money in Facebook and Twitter back to someone in Russia, a Russian billionaire. So that's the only other thing that I've seen on Twitter.
It's popping right now here too. It's come back a long way. I think somebody just washed out in the pre-market, and that's what you can have. Sometimes there's some big trader here wants out and they sell in the pre-market. If you're a big trader, never do that because liquidity's not there in the pre-market. Wait till the stock opens. The best time to liquidate your position if you're a big trader is always at the close because it's always thicker then. But middle of the day, you're fine. Twitter is a big, thick stock. But when you're trying to liquidate a big position in the pre-market, even Twitter has a little bit of a market. But if you want to sell like 50,000 shares of Twitter in the pre-market, you're going to move the price. You sell 50,000 shares at 10 a.m. in Twitter, you're going to move it like a few cents. So, that's, the consideration here, big fish, don't trade in the pre-market and push the price down. I think that's what we just saw, some trader washing out.
All right, down 21 cents here. I mean, I'm looking at this. You got the 1946 print after earnings. I mean, not a good chart coming
almost giving it all back.
I know. I mean, but are you going to get a chance at 1750, Dennis? Are you going to get it down there to fill the gap?
A million times. So, are you going to get the chance again? Maybe. Am I going to jump in? I've been torn on Twitter for a long time. I've said, and I had it once from 14 to 15. And I still loved it at 14. It didn't get down there in the most recent move. I was licking my chops. I know Brad from the UK there, he actually got some there when it got down in the recent move down in the 15s. But it never got down to the 14 level for me again, which is the level that I always really liked. That's where we bought them back in April, May, June of 2016. That's where we bought them at the beginning of April in 2017. And we didn't quite get there. And, that's where I was like licking my chops to buy some more Twitter. So I got a little bit cheap. That's always my problem, I think, on my investments. I get to, I don't like to chase it at all. And it's probably why I miss a lot of, good investment opportunities there. But 1990, had the big pop on earnings, kind of in the middle of nowhere here. So I don't know. There's air below, there's air above. I can't see pulling the trigger here at this price.
Yeah, I mean, it's kind of, where's your out? I mean, if you're buying this thing at $20, okay, you're going to stop out under 19 and, let it try and fill the gap. So kind of in a wide range here in Twitter. Looking else here, we were going to go to the ratings there. Any significant ratings changes?
There's a few here this morning. Monday's usually a busy day, but today it's actually pretty quiet. We said Twitter already. It got upgraded to neutral at Citigroup, which gave it a little bit of a pop, and then it had the big drop there for whatever reason. Bluebird Bio, which has been an absolute monster, is getting downgraded this morning here at Evercore. It's pulling back a little bit, but just like we say overhead supply, I'm going to say underneath demand in Bluebird. There's just a lot of people who are blue because they didn't buy this stock and they want to buy on every pullback, VLUE. They think it could go the way of Kite. I mean, it is a little pharmaceutical company that is growing. Biotechs are in shambles, but not Bluebird and Juno. Those two stocks continue to outperform all other biotech stocks. So there's just underneath demand in those two stocks. So it's pulling back a little bit on the downgrade here, but it was down even more this morning. Where do we get down to in BLUE?
Let's see here. Blue is coming off its low. Its pre-market low is 152.10, so you're climbing back. I mean, this one a little bit harder to find the support because you can see we've already taken out the low from Friday keep an eye on a close. I mean, if this thing comes back, gets back above Friday's low 55.70, the close at 56 and a quarter. Came off hard though, man. It got up to 164.80 on Friday and then sold off. So big range. And I think I was looking at the earnings, and I think they made $7 million last quarter. But obviously they're not buying it for the current revenues.
They're buying it for that growth in the pipeline.
Yeah, find what's in the pipeline. S&Ps are showing life here. We are now unchanged at 82.75. That represents your all-time closing high from Friday. Folks, on the upside, big number for continued rally. 85.50. We hit that on Wednesday. 85.50. That was your high on Friday. That's your all-time high. Only a couple bucks away from there. And the current high is 84.75. So let me pound the table there on that upside level in the S&P 500 index futures.
One other that I had on my list for ratings was Dish. They're getting upgraded this morning at Pivotal. That stock is trading up almost 3% in the pre-market. It's at a very interesting level. It's right now trading right near the $50 resistance. Got there multiple times in October. Really couldn't get over it. Snuck its head above it at 50.09, but that's not enough in this decimal world for me to say, oh, we're through 50 here. So 50 remains resistance on this stock. It was just 46 a few days ago. Let's see what it does at 50.
Yeah, 49.70. Right where you're trading right now is 49.75. So 49.70, that was your October 23rd high, and then 50.09. So agree with you on that one, Dennis. I don't know. I don't think you want to be shorting this thing right off the hop here at 50. It's been a slow and steady decline. Let's see if Pivotal Research can get it off the mat here with the upgrade. All right. If anything else?
One other rating. We had some analysts funding it out today in Hyatt. Wells Fargo upgrading Hyatt, and then Hyatt getting a downgrade at B. Riley. So neutral.
An analyst battle in Hyatt.
Neutral is what B. Riley says on Hyatt. I don't see a price target there from B. Riley on the downgrade as far as the upgrade is concerned. They're upgrading it to outperform, and I don't see a price target there either. So
this in play, Spencer?
No, I didn't think so.
Well, what was the big? Was that earnings then on Friday? What our Thursday was when it went from 60. I'm looking when it went from 64
that was earnings.
All the way over.
That was Thursday after the Thursday.
Okay, so that was
pre-market.
earnings.
Thursday pre-market. Yeah.
Okay.
And not off the greatest report. They had they actually missed by 6 cents. 13 versus 19.
It's all about guidance, though. I don't know what the guidance
was. They plan to sell $1.5 billion of real estate over 3 years was the 733 headline, because even their net income guidance, they did take that up. You're right, Dennis, from 173 to 201. They moved up the lower end and the upper end from 193 to 210. So I thought they'd make more than a couple $100 million or net income, I guess. So Hyatt for this one with the downgrade, with the upgrade here. Let's see if it could stay green. Get green and stay green. 67.36 was the close. High on Friday, 67.49. Unfortunately, under 66.14. If we continue to go that way, your 2-day low is 64.91.
Where are we at on some imbalances, Dennis?
They're growing. Square is now 124,000 to buy. Alibaba is now 93,000 to buy. Those are still significant trends. And the Twitter trend continues too. It's 4 days in a row it's had sell imbalances. So, you know what, I use that, you know, when I'm swing trading or I'm doing, you know, something from a little longer term perspective. It's good information there. Because, you know, somebody's been selling a piece here the last 4 mornings in Twitter. It's down here again this morning. And obviously, you know, there's multiple headlines there. The upgrade within the Saudi prince obviously arrested over the weekend. That's a big Twitter shareholder putting a little bit of heat on the stock as well. The GE buy balance is now 923,000 shares. That trend is significantly broken here now because it had selling balances for almost 2 months. I felt like. And now, you know, the last couple of days, we're starting to show some buy and bounce. This is a big one here today. So I'm taking note of that. That's why I think, you know, it might have turned in the short term here for GE. Sprint, 694,000 to sell. That's significant, obviously, and that's the merger not being on the table. Nike, 95,000 to sell. We haven't looked at Nike for a while, and it's interesting because it got back down there. And I tell you, if you want to talk about stocks that are in a long-term range, between 50 and 60 in Nike in the last 2 years, it always gets up to 60, it sells off, it's down to 50, it finds buyers. It did it again, getting down to $50.35. Now we're back up in the middle of that range. This thing has been in a significant range, Joel.
Right, and now you're at 55, so 55
Middle.
to 71, right in the middle. It had that good news. I think it was at an analyst day and went up and just filled the gap. That was if you were waiting for that gap fill, you had a 57 and a quarter high. That filled the gap from the 57.42. Oh, it was 57. I guess not quite 57.42, but still above 57. That's your resistance. Spencer, you want to wrap things up?
I can wrap things up. That is our show for the day, folks. If you want to catch it again, you can do so by going to youtube.com/BenzingaTV or listening to our podcast on iTunes, SoundCloud, and Stitcher. Just search for Benzinga or PreMarket on any of those platforms. Hope you enjoyed our chat today with Rachel Shasha. She's again at SassyOptions.com. And that's it for us. Don't forget to like us on Facebook. You can follow Joel and Dennis on Twitter at Spoos and Triple D Trader. But that's it for us today, folks. Have a good rest of your day. We'll be back with you on Tuesday.